Hey everyone, it's Imran from Options Insight, your macro options daily for today. Now, before we jump in, if you like these videos, you like this type of content, please like and subscribe to the channel. That will really help us with the algorithm and get more people to see this type of options related content, and it'll really help us grow. So we said it was going to be a big one, and my God, stocks had a roller coaster yesterday. So CPI came out lower than expected, 0.1 versus 0.3 expected on core month on month. Market squeezed like hell up to 41.80, but if you blinked, you missed it, and it faded all the way back down and actually closed the day down at 40.20, which is pretty much where we were before the move. So round trip back to zero. That 4,000 strike zone for OPEX seems to be providing some gravity that may have well played into it. But in general, we had already said that if we did get a pop on CPI, it would likely get faded after Powell spoke. And I guess the market, to some extent, front running that idea and saying that up here at 41.80, there's no way Powell's going to be bullish, so we're just going to sell it now. And we're going to take profit on any short-term tactical longs maybe that we've got into, and that's probably why we faded. Right? That's what it looks like. Now, actually, funnily enough, the fact that we've come all the way back down and those inflation numbers have rolled over a lot quicker than a lot we're anticipating, there is a chance now that Powell actually kind of softens language and comes in a bit more in line with what markets are pricing, because rates markets obviously are pricing cuts for next year. And if we were to get some kind of agreement from Powell and the Fed and their projections that the market is maybe right, then that could fuel a rally from here, which will be interesting. I don't personally think they have a lot of incentive to go that way. But given that the market faded that entire CPI move, I'm struggling to see a big down move on Powell right now in terms of the event risk. If we look at outside of the US stocks, European stocks finished actually higher. So they managed to hold on to gains, unlike the US stocks, which is a bit surprising. And then Asia lagged behind, not rallying quite as much. We also saw commodities explode higher. Best mover on a vol adjusted basis would be gold, which was up nearly 2 sigma on the day. So good move there. And we'd been flagging that gold gamma kind of looked quite good value where it was at around 14.15 and getting a decent move out of it there. But it still failed to close above that 18.10 area, which is providing resistance. It's only really if we can manage to convincingly break that level, then gold maybe has another 3 to 5% in it to the upside before the next levels. And it didn't manage to convincingly break that yesterday. Obviously, volatility smashed across the board. You can see a lot of red there. Nasdaq down 3 vols, S&P down 2, and they were actually fixed strike vol moves because the spot didn't really rally that much. So obviously on the previous CPI the month before, spot rallied 5% and the vols came down, but that was because they were following the skew. The skew was already pricing a lower vol on higher strikes. On this CPI, whilst we momentarily rallied, the fact that we gave it all back meant that the spot levels that we started with were still the same spot levels, and the implied vol was just fixed strike volatility getting hammered across the entire surface. So that was quite a butchering in vol, and kind of shows you that the street was just kind of waiting for that move to finish and was just ready to dump vol after that. And we didn't really see any buyers come in to take the street out of anything either, which is why vol just had no bid. Outside of this, I do think commodity vols were also softer. You can see here, down, over a vol point across most of the space. Nat gas vol, interesting though. Nat gas has actually been up 9 vols on the week. Obviously, it's at around 100 vol now. That's been winging around like an animal. We've had a 30% rally off the low in the last week. So nat gas is loving a bit of a 30% move every week, week in, week out. So it's a pretty tough space to be too short gamma. We've been hanging in there okay, actually. We've got some wide strangle structures out that aren't getting us into too much trouble. So despite we've got a realized vol around 110, we're managing to do okay off running some shorts, and we have closed out some of that risk and managed it and taken some profit there as well. If we look elsewhere in carry, we are seeing green across the board in equities. So that's just suggesting that even though vols got smashed, you're still seeing realized vol lower now than implied. So this is a theme that we're likely going to see into year end. Once FOMC is out the way, once expiry is out the way, everyone's just going to be looking at the holidays and realized vol may actually fall off a cliff, and we may see single digits across the board. We've already got single digits on FTSE, on Nifty, We did have single digits on Europe, but that's popped a little bit recently. I wouldn't be surprised to see all these major indices go into single digit realized as we go into the last couple of weeks of the year. Okay, and then lastly, skew getting whacked as well. Skew caught a bit of a bid yesterday alongside Vol, and it gave it all back. Not yesterday, the day before. Yesterday is when it gave it all back. Obviously, the CPI number coming out softer, kind of reducing that left tail risk of needing a super hawkish Fed, and that kind of reducing the need to kind of pay up for those put options. FTSE skew is back to its lows, so you're looking at a near 0 percentile level there. And interestingly, VIX skew got smashed as well. So you've got call options generally trading at a premium on VIX, and they came in 20 vols relative to the puts, which is a pretty staggering number. And that means that skew is now in the 100 percentile, which basically means that these calls are about as cheap as they ever get. Okay, so in VIX. Now, I'm not saying go out and buy them, but I'm just flagging that call skew in the VIX has just got hammered. And then lastly, commodity skew, oil and GDX, which is the gold miners, skew there getting hit by a substantial amount. Everything else kind of not really worth mentioning. Moving on to today's main event, obviously FOMC. That's what everyone cares about. And the big question really we need to ask is not how many basis points they're going to hike, right? It's pretty much a done deal that they're going to hike 50 bips. The question we need to ask, and we need to get an answer to out of Powell maybe, is are Fed cuts next year coming? Okay, will the Fed cut rates next year? That is the question. Because the market thinks they will, but up until now, the Fed has been adamant that they won't. So looking at the dot projections, you can see the market is here. The medium dots are higher than that. This is for 2024. But basically looking at the Fed funds futures, you can see that lift there in Fed fund futures yesterday, or over the last week, has been taking out hikes and putting in, obviously we have this shape here, tells us that there's cuts coming, and wherever the peak is in rates is around June next year. So it looks like terminal rates have come in to around 4.8%. That's what the market's pricing. And then we're going to see if the terminal rates that the Fed puts out go above that or not. People are thinking it's going to come in 4.75 to 5% terminal rate, so kind of in line with the market, maybe just a touch higher. And then the idea is the market thinks by June, you're going to hit that terminal rate and you're going to start cutting. And by the end of next year, you would have already cut maybe 2 times by about 50 basis points. So really, that's what we want to get confirmation of, and that's what the market's going to care about. And if the market gets a whiff that, yes, those cuts are realistic and they're coming, then equities will probably relief rally on that. But if they stand pat and they stick to the script and they say, no, there's no rate, don't expect any rate cuts next year, and if the market believes them, then you may get a bit of a drift in markets. It does seem like the 4,000 strike is in play for expiry. So even if we were to get a move down, I think 39.50 is likely to find support like it has done over the last week. And we may well find ourselves gravitating back towards 4,000. And it's only until that 4,000 strike goes away after Friday's OPEX that you may see a real, the market freed up again and those natural market flows to take the market where it wants to go next week, once all of that expiry, gamma and delta has moved off and markets aren't quite as distorted. It does seem like this is a very big expiry for December, and it may well be distorting some of the moves and making it quite hard for this market to get away from the 4,000 area. Okay, ideas. So in terms of ideas, we do think this differential between interest rate vol and equity vol is quite interesting. Clearly, it's been moving, TLT, so you can understand why the vol's elevated. But we do think in terms of after the last major catalyst tonight, the FOMC, there's nothing really on the macro, and we're going into year end. So there's a good possibility that TLT kind of finds its level and then just goes to sleep for a couple of weeks, right, into the year end. So we do think TLT realized is going to come in alongside other cross asset realized. And then we do think TLT up here on a higher vol than S&P, which is quite rare, we don't think that's necessarily sustainable. So whilst we expect S&P vol to come down as well, we think TLT will be dragged down with it. You look at the MOVE index, you can see it's very elevated relative to the VIX. It's been a theme for this year that rates vol has been high, and in general, whenever vol comes down, it's equity vol that comes down a lot faster than rates vol. But now that we have obviously seen decent bid forming under the bond market, There's clear evidence of inflation falling fast. There's 2 CPI reports in a row coming below expectations. That's the first time we've seen that this year. So we do think there's room for rates vol to come down, especially in the front end maturities. Okay, so if we look at the dashboard on TLT, to wrap up, we've got some VIX. Obviously, we've got some VIX puts on the book that options overlay subscribers will know about. We've been dealt hedging those using futures. We got into those early. VIX collapsed. We bought some futures. We thought the VIX could pop a bit around these events. But after yesterday's moves, we kind of felt that the better way to express this VIX trade, we want to keep the puts on. We do think the VIX goes lower, but we think the volatility on the VIX has got a bit high now in terms of the super short dated options, right? So you can see here, when we bought these options, the vol was at around 50, 60, and the futures on the VIX were at 24.5. Now, since then, the futures have come down to like 22. That's the orange line here. And the implied volatility as we get closer and closer to expiry has exploded on the VIX, which is normal, but that's back to 115. So we don't really like carrying that premium on a 115 vol. So what we'd rather do is sell a lower strike put against it, turn our puts into a put spread, run them naked, so get rid of any delta that we're holding, get rid of any futures that we're holding. And now we've just got a naked put spread on the VIX that will max out if the VIX was to collapse below 20 into next Wednesday's VIX expiry, which we see as a pretty high probability scenario because of the whole seasonality and the fact that the market probably going to go quiet next week, and we tend to see vol get whacked into the holiday period. All right, that's it for today. Have a good one. Be careful on that FOMC move. I think it could be choppy, but net, I don't really think we're going to break too far away from 4,000. If we were to get a sharp pop, I wouldn't be surprised if it was short-lived. But good luck out there. I'll catch you tomorrow.